So today on Real Estate Titans, we're going to talk about active investing versus passive investing. And I actually shared a slide. I'm gonna try to pull it up on the screen that I came up for you guys, and I want to show you this if I could share it. But anyways, the whole point is you could really invest in real estate as super active, and you could be super passive. So what's the number one way that you invest in real estate that active? And that's doing your own flips. Like being a house flipper is super active because if you buy a house, you have to renovate that house, you have to know the comps, you have to list that house and sell that house. That's a lot of work. And the more active you are, the higher returns you get. So the more active you are, the higher return you're going to get just by virtue of that, because you're a super active investor. Okay. The less active you are, the less returns you're going to get typically, right? But you don't have to be super active. Okay. You could be more passive. I can't, I'm having a hard time sharing the slide, but I'm just gonna go through it. And if anybody's interested, just type in the chat, say send me the one page about active and passive. So number one, fix and flip. You finance your own deals, you renovate, you sell the property. It's high risk, high reward, requires time, skill, and capital, but you get the highest return. Okay, the significantly high return. The last flip David and I did, we just ran the numbers. It's over 80,000 in profit before taxes, after everything. Very good return. But the amount of work that my brother had to do was significant. And if you have a full-time job, you might not have the ability to do that. And you don't have to, because we're going to go down the list. Number two is the BRRRR strategy, BRRRR. If anybody has heard of it, raise your hand. Give me some feedback that you're listening. Anybody heard of BRRRR? Okay, two people. So BRRRR, it strictly means buy, rehab, rent, refinance, and repeat. Any new investor, I would recommend that, right? You buy a property that you're going to live in. It's kind of similar to flipping. It's very active. You're going to keep the property in your portfolio. You're going to rehab it. You're going to rent it out. When you refinance, you're going to get all your capital back, and then you're going to repeat. You're going to be able to do it again. That's still very labor intensive, but it leads to long-term wealth. And any newer, younger investors, I would specifically recommend this strategy. Because if you guys remember Jeff Duchesne, who has over 150 doors, he was only 30 years old and he was on the call. He buys all his properties in Manchester. He's on a previous podcast episode. Like, that's how he started. He bought a 3-family in Manchester. Him and his roommate literally lived in rooms and rented out the other ones. And they did that for years and years and years and years and years. And when you're younger, you could take a lot more chances, right? Because you don't have kids, you don't have jobs, you don't have mortgages, you don't have these responsibilities. So that's why that's the second, but it's also very active, right? You're sacrificing a lot, you're renovating, you're refinancing, you're being very active. Okay, number three, I'm actually going to combine three and four. It's self-managed rental properties. By a show of hands, who has a rental property that they self-manage? Yeah, I love that. All right. And I'm gonna group short-term rentals in this, which is a little more active, but I'm gonna group them too. So any properties that you own and manage is gonna get pretty active, right? Because you have to deal with tenants, you have to rent it out, there's management involved. But as you learn the business and as you acquire and manage tenants and you learn financing, you're going to get really good at managing property. It's going to feel pretty easy. Like David and I own and manage over 30 doors while having a full-time real estate business, and it feels very easy. We do have some staff and some support, but if you had a full-time job that was outside of real estate, that might be difficult. And that's what I always tell people. You're going to get to a certain amount. It's good to do it yourself to learn, but you're going to get to a certain amount of rentals where it's going to become too tough for you to manage with having like a family or maybe a job or other obligations. And in that case, you can now move down the list to my point number five, which is long-term rentals with a property manager. And I don't know why so many people overlook this. Like David and I have a property management business that we started because Ron Fredette told us to. And we literally do it. We don't market it. We don't advertise it. We literally just do it as a solution to our landlords, because our landlords have this challenge where they buy multifamilies, they love it, they make money from all the benefits of multifamily, but they just don't want to manage it. Okay, so that's the challenge. That's the challenge with that. So property management can solve all that problem. So you just pay 5 to 10%. You still own the property. You don't have a partner. You're the sole owner, but it's solving the problem of having to manage all your property and having all that done for, you outsource it. So you own the property, but you outsource the day-to-day app operations. It's significantly less active, but it involves oversight and decision making, right? Because you're still involved. For our personal properties, David and I do this ourselves. We also do a third party for about like 30 other people. Okay. So if you wanted to get into that game, you could buy multifamily, you could outsource it, get all the benefits, but now you have a property manager. All right, this is where it's going to get more complex, but more passive. Okay. This is a great call last week we had. Shelly, I didn't tell you, but like so many people called me after the call and I was like, that was amazing. It was like a therapy session. It really helped me a lot. And what we talked about is like couples that are not on the same page, right? And this is where I think passive investing sometimes can solve that solution, because you could get into passive investing and then grow into more active forms of investing. Okay. So what's the way you invest in real estate passively? And that's going to be real estate syndication. Show me a hand if you know what a real estate syndication is. Okay, one person. So real estate syndicate is simple as this. Like I'm going to use David and I as an example. Say we're buying a building and we're buying a 10-unit building, okay? But we don't have the capital right now, or the resources, the time, or we don't want to put all our money into this 10-unit building because it's like $5 million. So instead we call Mark because we know he got all the money, and we call Ilya because he knows he got the rest of the money. And then we call Kate because we know she also got some money because she's hustling on the side. And we say, hey, we got this $5 million building. We need $1 million to buy it. We have everything set up, the banking. We're going to manage it. But each of us are going to put up $250,000 into this LLC. And we're going to use that $1 million as a down payment to buy this multifamily, like this huge property. And now we are partners, 25%, 25%, 25%, 25%. So now you own a big multifamily, but you're a smaller owner, but it's still pretty active because somebody has to be doing something, right? Like, meaning like I might be property managing, David might be doing all the fixing at the house, Mark might be the consultant, and Ilya is going to be like, strategic innovations or something like that. Yeah, that you look like a strategic innovator. So that would be a real estate syndication. A lot of people are interested in that, and that becomes more passive because, right, now we have four
Do
or
real
more.
estate.
Go ahead. Do we have a question? I heard something. Maybe not. So that becomes more passive, okay? And now we're moving to that point of like, now you're a real estate investor, but you're getting significantly more passive. Then the next thing is you could invest in a fund. Now, you put up the same 250 grand, and that's just an example. It doesn't have to be 250 grand. You put up the same amount of money, but with that money, you have no say in the property. Meaning, like, I'm going to use David and I as an example. We're like, hey, we're buying this 100-unit. Do you guys want to put money into this deal? You're like, hell yeah. Okay. Here's the return. It's like 10% guaranteed. Anything beyond that, you share in a profit, but it's a fund. So you're a limited partner, and David and I are general partners. And again, this is super high level. So what that means is we make all the decisions. We run the property. We manage the property. We get you all the returns. We take care of everything, but you get the benefits of the return on your money. So the better the property performs, the more return on the money you get. So that would be like a fund. And then the next level, or the last, I would say, the most passive way to invest in real estate would be a real estate investment trust or a REIT or an ETF or something like that. And that's basically almost as passive as investing in the stock market. By show of hands, who has like stocks as investments? You invest in the S&P, whatever. Okay, so that would be like that, right? Except you're buying specific real estate investment funds. For people who are active real estate investors, I don't recommend buying specific REITs and stuff, because you don't want your career to be in real estate, your investments to be in real estate, and like everything is all in one bucket. So you want to have some level of diversification when it comes to investing. And that, my friends, is how you go from super active real estate investing to super passive real estate investing, to give you those options. Now you have options where you don't have to go and fix and flip a house or be actively in real estate to get all of the benefits that real estate provides. All right. So that's all I had on my agenda. If you want the one pager, just say like send me the one pager and I'll send it to you. I did a little one pager of the most active to most passive. But now I'd like to open it up to questions. Let me know if you have any questions, any hangups, any mindset issues about real estate investing and what we talked about on this call today.